Hi, Hank, SixFourTrading. I'm going to talk about the market, the SPY, where I think it may be going, where we are currently at, and about what economic data we have coming out over the next 2 weeks. Let's jump into it. Okay, so this is the SPY. We hit a critical level last Friday when at market close of key level resistance. We came down to support. We've been selling off pretty good for a little while, right? Some relief, just hit the top of this area here on December 20th or December 18th, and just been selling off to the bottom of this long channel that you see here that I drew out. We've been in this channel since about August 24th, 2024. So we hit the top of it, we come down. Let me just draw something out here so you can see the bottoms, top, right? We didn't quite make it here, hit another top, rejected. Didn't make it all the way to the bottom here, rejected this area, false breakout, another false breakout. And then we got a clean, big rejection this day, all the way down to the bottom of this channel. Then we bounced up. This is a technical bounce. If you want to look at your fibs, here sometimes you can't see it, but there's a bottom fib there. We hit these fib levels pretty clean. I kind of jumped out the 7.8. I'm sorry, the 7.8. Rejected that from this big sell-off. So we tried to reclaim the sell-off and try to get back to the top. So we came back down, bounced back up into this channel, and we're hitting key level resistance. Now, the resistance that we're hitting right now is timely, because what do we have coming up next week? We have the actual Monday, we have some PMI, we have the Richmond Fed president talking, barking, speaks, trade deficit, ISM numbers, ADP employment numbers are coming out on Wednesday. Initial jobless claims are coming out on Thursday. Very important. Most important is an unemployment report. The unemployment rate comes out on Friday. Now, we've been getting mixed signals about the rate, especially back on this day here when they came back and revised this. They're always doing revisions, revise this down, 800,000 jobs. Like it was oops. But it was, to me, it was like, how do you oops 800,000 jobs? But they did, right? And so the bond market is not believing what the Fed or the numbers are coming out with. This is the 10-year yield. Ever since the Fed started cutting rates back in September, cutting rates, the yields, the thought is the yields go down. They're like supposed to go down. They went up, right? We are hitting a critical level here on the yields. We come down to support. We ran up, started coming back down from 4.5% when we hit that to go back up. So we're making higher highs, higher lows, right? We're moving in a nice wave pattern here. Now we're at a critical level back here from May 24th with the yields being over like 4.5, 4.6%. If this breaks out, this is a hammer candle at the top of a trend here on the weekly chart. This is a weekly chart. But pull us down to a daily chart, you can see how we're consolidating in this area. Now, we all know about moves up in a trend direction going up. We talk about this in my foundational KISS course and also on my Discord, how you have a trend that moves up, pull back, right? And then you want to watch for a break of this neckline, the top of this 4.632% here. You break this. I'm sorry, guys. I have a ear infection. Might sound funny, but I can't really hear it that well. If we break this level, we're talking about 4.73 as another key level, 4.7s. You don't want to get the 5, but you're on your way to it. So the 30-year, we talk about mortgage rates and how mortgage rates are going up. Even though the Fed cut rates, mortgage rates should be going down, but they're going up. They're really based off 30-year. The 30-year has hit a critical same type of area, CKL, critical key level, on the charts since the Fed cut rates back in September. So why is the market doing this? If you don't know, you don't even know everything about yields and bonds, except that when yields go up, bonds go down. Selling bonds, like not buying bonds, that's a problem, right? You don't want yields through the roof because then all of your costs for things go up. You want the cost for things to go down, your rates go down. So now we're at a critical key level here as well. the 3 top process, making a W. This breaks, this goes up, we start talking 5%. We start having, we having problems now, but they're trying their best to say everything is fine. But when you go to the grocery store or you go try to buy a home and the mortgage rates are like 7, 8% minimum, right? Anything out here, eggs, chicken, food in general is just expensive. People I've heard are taking out loans to buy food. This is not good, right? This is something that is a bit scary. So what do you want to do in this situation? You want to watch this. If you have a 401k, if you have a TSP, it's fine to just invest and watch your 1%, 2% gains a year. But then it comes a time where COVID happened and people were ready to retire and they couldn't retire because COVID happened and the market dumped. So what did the Fed do? Let's go to the SPY. Back in COVID, this is October 23. This is when the Fed decided to stop hiking rates. We're going to talk about that really quick as well. COVID happened. This is about it right here. This is where COVID happened. I'm going to switch to a daily chart to make this better. This is where the big drop happened. And why do you think it stopped? And we went on to build this rally for the past 2 years because the Feds dropped rates to 0. When you drop rates to 0, you're going to cause what? Inflation. Because everybody's buying everything. This is the market just went crazy, right? Because of that. So we go here. Take a look at the interest rates compared to recession. These are all the recessions we've had. The white here. Break this up a little bit. The dot-com bubble, right? Interest rates were at 4.5%. Subprime mortgages, interest rates were at 4.5% around here when it dropped. We're at 2% here. We got it down, but we went right back up. We're at 4.5%. We're starting to curl over here a little bit because they're dropping rates. But if you notice a pattern here, every time they start pulling down rates too early, it's right around recession time. They have to drop rates. So you start talking about, a recession and rates coming down. You're talking about inflation going up. This happened during Volcker. So let's jump back to Volcker right here. Look what happened during Volcker's time. The minus 52% here is how far the S&P 500 dropped. It lost 52% in 10 days. That is insanity. He had the interest rates got to 20% because he had to raise them up because inflation was so high. He said, I got to just raise everything up. We got to get inflation. The mistake they made earlier, Volcker did, was cutting rates too early. And so a lot of talk has been about the Fed's cutting rates too early, which may be showing its ugly head based on what the bond market is telling us. The bond market is saying, okay, I'm not believing this. Yields are going up because I don't believe you. Even though you're cutting rates up, we think you're cutting. Maybe they're thinking you're cutting rates too early because inflation is not stomped out yet. Going back to the everyday consumer who goes to the grocery store and who's trying to get a loan or trying to get a mortgage, a new mortgage, and the rates are all high, right? Clearly, inflation has not gone away. Clearly, inflation is not under control for the everyday person. I'm not talking about what politicians say inflation is or what they say the economy is. Saying it and everyday people living it is two different complete things, right? Whoever can receive this information, whoever wants to learn how to actually read what they're investing, I believe everyone, again, should be accountable for their finances. And in that sense, even though 401k or a broker you may have money to, or an investment that you may have, you don't want to throw your money into the blind and you're trusting an institution or individual to have your best interests at heart. They may, but it still would be prudent for you to go in and look at your own account, look at your own funds and say, okay, I can see the market. At least learn how to read a candlestick, learn how to read a chart. So if they say, well, the market is down, that your equity is way up in the air, I might want to take some of this off, right? Or take profits, right? At least you can validate what they're telling you and what they're saying that your investments are doing. Again, I still think that just coming up this week, um, I just see us waiting on data till Friday mostly to be able to say, you know what, I think that maybe the data coming out, I don't know. For me, I just want to see it come out and just be something that is either normal or shows exactly what the bond market and yield market, the bond market is actually telling me. But if that data comes out bad, that data comes out where we have higher unemployment, it may change the direction. Things are building up for me in a way from what I'm looking at that the Fed is going to pause cutting rates. They're not going to be cutting rates for a while. If the data comes out different between this week, we have CPI, PPI coming out next week, coming out where it's not in line with what the projections are, there's a potential that rates could get raised again. And then we run into a serious problem like the Volcker years, right? So again, Hank, I'm just trying to give you reality to what's maybe coming up for the week. To take a vested interest in your investments, take a vested interest in your financial future so that you may be safe and that your families may be prosperous and that you just don't believe everything everybody's telling. Don't even believe what I'm telling you. Do your homework. Go look at the research. Go look at the St. Louis Fed, who gives you the numbers, who gives you the yield curves, who gives you the SOM rule, who had bank term funding programs. You can go look at that the Fed did when the Silicon Valley Bank went bust. They came out with this bank term funding program that pretty much all these banks were asking for billions and billions of dollars, and that thing just ran all the way up, which they cut back in March of this year, or I believe last year. They cut it. Why are the banks are insolvent? So that's the other thing. And I'll leave you with this. Yellen, or the Treasury Secretary, has been selling bonds like hotcakes. Like she's on a street corner selling lemonade, right? She's just she's selling bonds. She's been doing it for a minute. And when you sell bonds like that, it does not support what the Fed's trying to do on lower interest. It actually encourages higher interest rates. It sucks up the money supply, right? It reduces the money supply when she's selling bonds like this. So it makes it harder for you to get loans or more costly for you to get loans and things like that. So they've done this for a reason, right? And the market has been sky high. One thing I will tell you is, in an election year, no administration wants the market to be down. You don't want unhappy people going to the polls. You want happy people going to the polls. And most people that are working have a 401k, government workers have a TSP, and they're looking great. So they're happy. They're walking into the elections. This party's done great. The market's at all-time highs. And even the politicians talk about how great the economy is doing because they look at the stock market and the economy don't relate, right? They're two different things. And so you need to take a vested interest. I hope you do in your investments, in your financial future. Just don't believe what everyone's telling you. Go look up the homework yourself, but get the tools to be able to understand how to read this information. You can you can look in my description. You can jump in and sign up and come in and get some of the courses that we have and get into the Discord and the things we talk about amongst the other members there all the time, or anywhere else. Just go get the information. Don't sit idly by and let people tell you that everything is fine and everything is shiny. Look over here, while there are other things happening in the background, and then the rug gets pulled out from underneath you and you're left holding it back like, what happened? I'm Haig, SixFourTrading. Thank you for joining. I'll talk to you soon.